What's up, guys? I'm Mike from Stocked Up, and welcome back to the Stocks with Mike and Tom show. We had yet another crazy day in this crazy volatile market. The S&P 500 was down about 1.5% today, and the Dow was down about 1.4%, and then the NASDAQ was down the most, about 1.7%. So we had a pretty not a horrible day in the market, but pretty choppy. And we had a decent day to the downside. A lot of tech stocks fell, like Apple down about 2.5%. Tesla reports earnings this week. They're down 2%. Microsoft had a pretty bad day, also down about 2.5%. So in this video, we're going to go over all of the stocks that we're watching for tomorrow. We're going to go over everything that happened in the market today and what catalysts we are eyeing out for in just the market in general. We do have the elections coming up, and that's both good and bad. The market's probably going to be the market is still probably going to be very choppy and very volatile until the election happens. But on the bright side, the election is getting closer, and after the election, the markets should be a lot easier to trade. So if you guys aren't subscribed already, don't forget to subscribe to see our daily videos on your YouTube homepage every single day. And don't forget to watch this video to the end. We have a lot of important information and news to share with you guys today. So with that being said, Tom, what happened in the markets today?
CNBC reports that stocks fell sharply on Monday ahead of a key deadline set by House Speaker Nancy Pelosi for a new coronavirus stimulus package before the election, while COVID-19 cases rise. And the Dow Industrial Average traded 410 points lower today. And that's a pretty big number. We can see the market was really red overall ever since the market opened today. And the news just did not help it at all. Amazon, Alphabet, and Microsoft were all down at least 2%. And that's really bad to see. A lot of these big tech stocks that have been holding up the market are actually starting to come down now. And all 11 S&P 500 sectors fell on the day, with healthcare and communication services as the worst performers. And as we all know, House Speaker Nancy Pelosi gave the Trump administration 48 hours to reach a deal before the November 3rd election. And that was on Sunday. So, we're either going to have a deal within about a day or two, or else they're just going to have to vote for that $500 billion package on Wednesday. But the Washington Post reported, citing sources, that a deal between Pelosi and the administration was not sounding imminent. The news sent major averages to their lows of the day. So the Washington Post reported that, and it just really sent the market down whenever that news came out. And a lot of people want this bill passed, but it seems like it just might not happen.
Yeah, I mean, if we do not get a bill passed, I would expect the market to continue down for the rest of the week. But in this market, any major catalyst that can come out at any time can definitely influence the market. So just be on the lookout. Make sure to check the news sources. Like I said, if we do not see a deal, I would expect the markets to continue down. So just keep your eye out for that news. Tom, when does that deadline expire? Do you know? I mean, it's got to be a day, right?
Yeah, I mean, she gave it out on Sunday, so you would think that it would have to expire sometime tonight or sometime tomorrow.
Okay, cool. So just watch out for a deal. If we don't get one, we'll most likely continue down. What else happened today?
Yeah, the Wall Street Journal actually reported that the Intel Corporation, or INTC, is nearing a deal to sell a memory chip unit to South Korea's SK Hynix Incorporated for roughly $10 billion, in a move that would reorient some of the semiconductor giant away from an area of historical importance that has become increasingly challenged. And this is just a crazy move throughout the day that we saw with INTC. And there was actually a couple of other stocks that were involved in this. And we can also see that WDC ended up flying up as well. And they're also going to be selling memory units to the same company, SK Hynix, which is a South Korean company. And then also MU ended up going up today pretty significantly as well. So those three stocks rose today, and really INTC led the way for a while, but the big move was WDC. But it's just crazy to see a $10 billion deal on Intel. And they recently actually just lost a contract with Apple. So it's just nice to see them filling the void. And we can see on a daily chart, after they lost that contract, they really tanked down. And now they're really starting to fill that gap back up.
Awesome. So yeah, that's great to see. Great deal. We all saw Intel just skyrocket in the middle of the day, along with MU and WDC. They had a huge run up in a matter of like 10 minutes. We could see on a 1-minute chart right here. It just, just flew up in the middle of the day right when this deal was announced. So that's great to see. Can you pull up Intel on a daily chart real quick?
Yep.
So we can see, like you were just talking about, how they are starting to fill that gap back up to the $57 area. Maybe like, like right there. They're pretty much trying to fill that gap back up from where they originally gapped down when they reported earnings back in July. So keep your eye on that. They also have earnings coming up and a dividend. So be careful with that. Earnings is extremely volatile. Tom and I really don't like to play earnings because even if you can predict the direction correctly, you can still lose money. And we are in earnings season now, which basically means a lot of companies are reporting earnings, and that makes the market normally more volatile than usual. We do have some big names this week like Netflix and Tesla. So we have a lot of big names coming up in the next couple weeks, but especially Netflix and Tesla for this week.
And Netflix is actually tomorrow.
Oh, is it? Yeah. So that's interesting to see. And then when's Tesla? Wednesday or
Tesla is, I believe, Wednesday. Yeah.
Yep. Okay. Awesome. So keep your eye on those two. And was there any other news today?
I think that does it.
All right. So now let's get into our Discord member of the day. So our Discord member of the day, his username is a little bit hard to pronounce. But I'm going to try. It's Nelg ENTC. So huge shout out to this person. I'm sorry if I pronounce your username wrong, but a huge shout out to this person for making some great trades in the group recently. CAT, Triple M, MU, Intel, and he had a couple other ones. So great job with those trades. And thank you for sharing positivity in the Stocked Up Discord group. So now for our momentum plays for tomorrow. And the first one we are looking at is JP Morgan, which is JPM. They were down just under 2% today. Tom, what levels should we be watching?
Make them fall right below 99.50.
All right. So if we could break below that, we are eyeing it to the downside. With the next play, we have GILD.
Gilead, make them fall below 60.20.
Well, I mean, this stock really fell off the past couple of months. I know they had a ton of hype and momentum behind them back in February and March, but they've really fell off. I mean, you look at mRNA, which is the other vaccine stock. I mean, at least they're holding up. I know there's a couple other ones like Johnson & Johnson, AZN even, but GILD really fell off.
Yeah, that's really crazy to see, actually. I did not expect them to fall off that much, but I mean, heck, whenever you're that volatile, I guess that just shows why there was so much volatility in that stock, because you just don't see that type of stuff with a normal well-balanced company.
Yep. And then we have CGC.
Make them go ahead and pop to the upside above the $20.15 level.
All right. And then we have RKT,
Rocket Mortgage. Make them fall below 20.70.
All right. So we are eyeing CGC to the upside if it can break above the level Tom listed. And we are eyeing JP Morgan, GILD, and RKT potentially to the downside if they can break below the level Tom listed. So now let's get into our unusual options activity for tomorrow. And we are looking at the Snap 31 strike calls that expire this Friday, October 23rd. There was about $2.65 million put into this play today. Looking at Snap, they do have earnings this week. And on their last earnings report, they actually fell on the earnings report in April. They actually had a pretty good rise. So with Snap, the market is falling slightly right now. Snap is a tech stock, but it had a pretty decent day today. But they're also pretty high. So what it really looks like right now that the smart money is shorting these calls. And I say that because one, the expiration is this week. And two, we're talking about the 31 strike calls while Snap right now is at $28.66. So we're pretty far out of the money, especially for a weekly contract. It really looks like they're shorting these options. Remember, they can be shorting these options naked, or they can be shorting these options through the form of a covered call. So basically what that means is like, let's say the smart money picked up, millions and millions of shares at like, let's say $15, and they want to protect themselves with this earnings release. What they can do is they can short like the 31 strike calls. So if Snapchat is above $31 after their earnings report, basically they'll get to sell their shares at $31 a share. If it is not above $31 per share by expiration, then they just keep all the premium they collected, so over $2 million. So right now it looks like they're shorting them. What do you think?
Yeah, it does. It really looks like they're shorting them. That would actually be all-time highs for Snap. Whenever they IPO'd, they ran up to around $30, or actually the $29.50 mark, and then pretty much fell off from there. So I could really see them shorting that. I really don't see them getting past that all-time high, at least this week.
Awesome. So yeah, I mean, we are in earnings season. We are in a very volatile market. So anything can happen, especially in this market. So now let's get into our comments from the previous episode. And we have Lenny saying, what software / trading platform are we using? So we are using Thinkorswim by TD Ameritrade. There's a lot of different platforms out there like TradeStation, eTrade Pro. There's so many, I can't even list them all. Like Ninja Trader. What's the other one, Tom? Like Tasty Trade?
Yeah, Tasty Works. That's a pretty big options one.
Yeah, so there's a lot of them out there. Personally, we like Thinkorswim by TD Ameritrade, which is what we are using the best. It's a little bit hard to learn at first, but they have a ton of features, and it's just overall a great platform. In order to get this, you need to have an account with TD Ameritrade first. We are not affiliated with Thinkorswim or TD Ameritrade. We just really like their software. All right. And then we have Ngok saying, how about CVX and XOM? So CVX.
Yeah, wow. It seems like CVX is really getting hit lately. I know that oil has kind of been hurting these stocks, and I know ZOM specifically has been really getting killed.
Yeah. What do you think about them on a technical standpoint?
I mean, from a technical standpoint, they just don't look too good yet. I mean, they didn't really retest lows like ZOM. I expected them to kind of retest the low of $30. So until they do that, I'm not going to be looking at them too much unless I start to see, maybe if they head back up to $40 or so and show some good momentum, then maybe it could change. Or maybe if they have good earnings whenever earnings come up. But the way oil's been going, I just don't see them having good earnings.
And then also, Exxon Mobil just got kicked out of the Dow, so things aren't the best over with Exxon Mobil right now. Personally, I would just stay away. From them. If there isn't an amazing setup, you don't have to trade that stock. So personally, I would just stay away from it. Give it more time, see if it can end up bouncing off the $30 level. If you can get it at a great price, then it might be worth a play. But looking at it right now, it just doesn't look the best to the upside or the downside. So even if you shorted it right now, it doesn't look the best either way. So personally, I would just stay away from it.
Yeah, and obviously one big problem with these stocks for the long term is that with all these electric vehicles and stuff coming out, eventually a lot of these like gas station companies are really going to get phased out. And I know a lot of people don't think that's going to happen right now, but within the next 30 to 50 years, a lot of these companies probably won't even be around anymore.
I mean, I would think that Exxon Mobil would find a way to adapt, like whether that be putting like superchargers at their gas stations or whatever it be. I mean, I don't see them just folding, but I definitely the electric vehicle, that industry taking over, that is a threat to their business. So good insight there. And then we have Copal saying, what do you think of JE? What do you think?
JE, I don't actually know too much about this company, but they don't look good on an overall chart. And you can see that they had actually reverse split actually recently, I believe. And that's just not too good. It's just a stock that I personally would never touch. It's going to be very volatile. And really, it's just going to be a flip of a coin on what it's going to do.
Awesome. And then we have Aaron saying, this is probably a dumb question, but if my stock goes negative, will I owe money? Like, let's say I invest around $100. Can I lose more than the $100 that I put in? Or would that $100 just be gone? So it's not a stupid question. Everyone learns. So To answer your question, no, you can't owe money. For example, like let's say you buy the SPY right now, it's at $342. If it goes down to $1, you would lose $341. You wouldn't owe money. The only ways you can technically owe money is if you over leveraged a ton and you were using margins. Like let's say your account value was $1,000 and then you borrowed money from your broker and put like $5,000 in SPY. And if it goes down a certain percentage, then you can owe money. That's one way. Another way to owe money is if you short a stock and it just explodes. Like if you short, like let's say you short RKT right now. Right now it's at $20, and let's say it goes up to like 80, then you can owe money depending on how big your account is. Another way to owe money is if you are doing some extremely risky spreads in the options market, like selling calls or things like that. If you sell options, you have some pretty large risks if they are not spread trades. So that's another way. But generally, your broker isn't going to let you lose more money than you have in the account. Brokers nowadays, pretty much every broker has safety protocols in place, so you can't lose more money than what's in your account unless you apply for specific margin levels. Then that's possible, but in general, you cannot lose more money than you have in your account. But it depends on the brokerage and it depends on your margin level. But besides that, great question. I'm sure a lot of people at least learned something from that question. So Tom, do you have any last minute stocks, options, or anything you are watching for the market for tomorrow?
Yeah, the big stuff I'm really going to be watching this week are going to be bank stocks. It just seems like really these bank stocks are not doing well lately. And if we look at a lot of them like Bank of America and Citigroup, specifically those two, they're doing really not well lately. And you can see
really not well.
Yeah, really not well. I love my wording sometimes. But Citigroup really fell down over, a couple weeks ago and really tanked. And Bank of America looks like it's about to fall over, kind of like Citigroup did. So I'm just keeping my eyes on those two. And just the banking sector overall has just not done too well lately.
Yeah, a lot of banks are in a position right now where they're not struggling, but they're not in the best position to say the least. They had to put a lot of money to the side for a potential mortgage crisis. They're just not doing the best right now. If the economy does recover, that would be great for bank stocks. But right now, especially ahead of the election, they're not in the best spot. One, their charts aren't, but also two, fundamentally, they are not in the best spot right now. So we just have to keep our eyes on it, depending on who wins the election and depending on how the economy continues to recover. That will change the game for bank stocks. So we're going to keep our eyes on it, but for right now, in my eyes, there's no play with them. But we did see last week that some of the bank stocks like Goldman Sachs actually made a ton of money through their trading department, and that's great to see. While other bank stocks like Bank of America didn't really make too much in their trading department. So just keep that in mind. Some bank stocks are positioned better than others, like Goldman Sachs. They're in a pretty good position right now, and so is Morgan Stanley. But overall, the financial sector is a little risky right now. All right. So thank you guys so much for watching this video to the end. We're just under 30,000 subscribers. So if you guys would consider subscribing, Tom and I would really appreciate it. And all the comments in the comments down below really help grow the channel. So thank you guys so much for everyone who takes the 2 seconds to leave a comment. Tom and I really appreciate it. If you guys have any questions, let us know in the comments down below. But other than that, thanks for watching.